Hello, and welcome back to the third module of our Wealth Building 101 course. In this session, we're going to talk about the second important financial tool for managing and building your wealth, and that is the cash flow statement. Now, we likened the balance sheet to a fuel gauge because it tells you how much financial fuel you have at your disposal and how much range or freedom and options that gives you. The cash flow statement is like the speedometer because it tracks how the money or the cash flows through your life on a daily basis. And if you manage this flow effectively, you can build your wealth much more quickly than if you don't manage this flow. The cash flow statement tracks how much money is coming in, which is all your sources of income, and how much is going out, which is all your daily and monthly expenses. The cash flow statement is also sometimes called the income statement, but just know that it tracks both income and expenses. When we go through the cash flow statement, it may look familiar because it works just like the balance sheet. Let's start with the income. On one side of the cash flow statement, we itemize all our sources of income. Let's take an example. People make money in all kinds of ways. Most of us have a job of some kind, so we get a salary or hourly wages every 2 weeks or every month or however often we're paid. So let's say this person makes $5,000 a month in salary. If you do some freelance work in addition to a regular job, or maybe that is your primary source of income, we would capture that amount as well. If you have investments, stocks, or mutual funds, for example, that yield interest or dividends, that's a form of income. If you own a rental property and collect rent, or have a business that provides some form of personal income, you would capture that, though you may have a cash flow statement specific to your rental property or business for tracking and tax purposes. But for our example, we'll include them here as forms of personal income. When we add all this person's forms of income together, we get a total monthly income of $6,930. Now let's flip over to the expenses side of the cash flow statement. Think about every bill you pay, everything you buy, every dollar you spend. Most of us have a mortgage or rent to pay for where we live. This person's mortgage is $1,200. This person also had a rental property, you'll recall, and they spend $525 on the mortgage for that property. We've got utilities and the phone bill, that's $300 a month. Then there's groceries, eating out, and going to a show or two. This person has a car payment, so that expense is captured, $400. And they have a credit card payment they make every month of $200. Most people have more expenses than are listed here, and you probably do too. The cash flow statement should capture everything, but this is just an example. When we add up this person's expenses, they spend $3,425 a month, or at least they did in the month being tracked. Easy enough, right? Now let's look at the income and expenses side by side. We have the income on the left, the expenses on the right. These are monthly figures, but you can track it weekly, quarterly, annually, whatever period you want. Another thing to note is that although the income and expenses are shown here side by side, on a real statement, you may find them displayed vertically. So you have the income at the top and the expenses at the bottom, but it's the same information. Now understand, the cash flow statement is not a budget. It's not what the person plans to spend or intends to spend or their spending goals. This is what actually went out the door, based on receipts and bank statements and actual expenses. It may or may not match a person's budget if they have one. So when we look at this cash flow statement, we know exactly what happened to all the money. We know how many dollars came in, from what sources, and we know where every dollar went and what it was spent on. And when you compare this month's figures to last month's, or you track it every month for a period of time, you can see the ebb and flow of money in your life. You can compare this month to last month and see when you made more money or less, and when and where you spent more or less money than normal. Let's look at the totals for a moment. In this month, this person took in a total of $6,930 and they spent $3,425. With these two numbers, the total income and the total expenses, you can calculate your cash flow. All you have to do is to subtract the total expenses from the total income. For this person, $6,930 minus $3,425 equals $3,505. So in other words, after all the bills were paid, all the daily expenses covered, this person had $3,505 left over. This is called positive cash flow because that number is positive. They are spending less than they make. If this number is negative, that's a negative cash flow situation, and it means that you are spending more than you are bringing in, and you cannot build your wealth that way. Why? Because that positive net worth is the fuel for your wealth building engine. That extra money is there to improve your balance sheet, to buy those appreciating assets or pay down some liabilities, like we talked about in the last two sessions, in order to increase your net worth. Obviously, you want to make this positive cash flow as large as possible. So how do you do that? Well, there are two ways. You can increase the amount of money coming in. You can get a raise or a promotion at work. You can start or expand your freelancing business. You can invest in property or a business that brings in more income. The other way to improve your cash flow is to reduce your expenses. You can go through your costs and see what could you cut down, eliminate, or renegotiate. Perhaps local cable companies are offering a special to new customers, and you can either switch and cut your cable costs, or you can call your current cable provider and negotiate a new price or package. Maybe you're paying for a subscription that you don't really use anymore, and you could just cancel it. We'll have other video sessions on specific ways to manipulate your cash flow, but I want you to understand this basic principle because I know you can look at your cash flow statement and immediately see what changes you might want to make to improve your own cash flow. So let's look at some basic lessons we can glean from the cash flow statement. Spending more than you make will always lower your net worth because you're piling up liabilities, most likely credit card debt or a home equity line of credit, to pay for what you couldn't afford with cash. On the other hand, spending less than you make will increase your net worth, assuming you use it to buy appreciating assets or to pay down your liabilities. As I said, you can track your cash flow on a weekly, bi-weekly, monthly, quarterly, or annual basis. For a typical household, a monthly cash flow statement is common. If you're wanting more real-time monitoring and feedback so you can make better decisions on the fly, you might update it bi-weekly or even weekly until you get it to a relatively stable pattern, or at least until you understand the broad ebbs and flows of money in your life. If you're wanting to look at trends over time, you might look at it quarterly or annually. So now that you understand your financial speedometer, your cash flow statement, I want you to make your own. Download the template we've provided and fill it in. Gather up all your sources of income and look at your bank statements, checkbook, and receipts for your expenses. Document all the money that came in and all the money that went out for the last month. Then find out how you did. Subtract the expenses from your income and see, did you have positive cash flow? Negative cash flow? Why was it positive or negative? Where did the money go? Did the money follow the plan you had for it, or did it have a mind of its own? Once you start tracking your income and expenses, you'll see what your money is doing, and you can start to take control of it so you can direct it towards the wealth building you want for yourself and your family. Notice the impact that your financial decisions have on your cash flow. Are you happy with those decisions? Do you want to make any changes? There aren't right or wrong answers here. I'm not going to tell you to stop drinking your lattes every morning. This is a tool to give you information so that you can make the decisions you want to make to create the life you want to live. But I will encourage this. Make it a goal to increase your cash flow every month, even if it's just a little bit. You got this far through this course, so I assume you want to be in charge of your finances and that you want to create a brighter financial future for yourself. So look at your cash flow statement, see what your cash flow was, and figure out how to make it a little more next month, and a little more the month after that, and every month. If you increase your cash flow every month, you create more opportunities to buy assets, reduce your debts, and increase your net worth. And that all adds up to more financial freedom and security for you and those you love. So go download the template now, fill it out, and I'll see you in the next session.